Dirty dealings, corporate battles, consumer woes. This is Evening 5. An investment bank warns Petronas may lose a portion of revenue after Petroleum Sarawak or Petros was made the sole gas aggregator in the country's largest state. RHB Investment Bank said in a note today that the earnings impact on Petronas remains uncertain, and depending on the loss, the shift could affect its ability to keep up capital spending in the long term, though its current balance sheet remains solid even with dividend commitment to the federal government. It flagged some potential operational disruption in the near term before much clarity or a clear resolution is achieved. Ultimately, it believes both parties would want to maximize production, especially when oil prices are expected to stay stable. The gas segment contributed about 101 billion ringgit or 30% to the state-owned energy giant's revenue last year. Petronas' role in all natural gas trading activities in the state has been taken over by Petros, with its first two signings taking place today with Sarawak Petchem and Sarawak Energy. RHB Investment Bank noted that the gas business took up 22% of Petronas' domestic capital expenditure, and the transfer to Petros may lead to a more prominent cut in the segment, with exploration and greenfield projects likely to take a bigger hit. The Kuala Lumpur High Court dismissed applications by former Prime Minister Datuk Sri Najib Razak and ex-Treasury Sec-Gen Tan Sri Dr. Muhammad Irwan Seriga Abdullah to be granted discharge not amounting to an acquittal or DNAA in their 6.6 billion ringgit criminal breach of trust joint trial. The two men are accused of diverting government funds to International Petroleum Investment Company or IPIC. Their counsels had asked for the charges to be temporarily dropped as the prosecution had yet to furnish them with the over 100 pages of documents, including internal memos from two ministries and the Cabinet Secretariat, for them to submit their defence. In response, the prosecution explained that they do not have control over when the documents can be declassified. Following this, Judge Datuk Muhammad Jamil Hussain ruled against granting a DNAA and directed the prosecution to continue with the case on November 14th, which he stressed is the final adjournment date. This case has been postponed for approximately 6 years to make way for Najib's other criminal trials, such as the SRC International trial and the 1MDB Tenor trial. U-Mobile is planning an initial public offering or IPO that is expected to raise over $500 million, approximately 2.34 billion ringgit, as early as the first half of 2025, Reuters reports, citing two sources with direct knowledge of the matter. According to The People, it said the telco will file an IPO application to Bursa Malaysia later this month or in August for a deal that would value the firm at more than $2 billion. The deal, if it proceeds, could be the largest IPO in Malaysia in nearly 8 years, according to LSEG data. The report said one of its sources said the proceeds raised will be used for mobile data network expansion, among others. In a statement in response to Reuters' query, U-Mobile said its corporate policy is to not comment on speculation, as necessary announcements will be made if there are any concrete developments of that nature. It reportedly added that it is preparing to participate in the tender to build Malaysia's second 5G network. BWYS Group ended its maiden trading day on the ACE market at 35 cents per share for a 59% gain over its 22-cent IPO price. The sheet metal products manufacturer opened at 32 cents this morning and rose to as high as 36.5 cents a piece. Its closing price of 35 cents values it at 358.8 million ringgit. Managing Director Kang Beng Hai said the company is deeply grateful for the market's confidence in the group and called its listing a significant milestone, which is testament to its 25 years of expertise navigating the complexities in the sheet metal product industry. These, he said, range from managing a vast global supplier network and streamlining procurement to meticulous steel price monitoring, efficient inventory management and optimized logistics planning. Now, armed with fresh capital, he said the company is poised to accelerate growth and seize new opportunities. Grand Central Enterprises, which operates hotels under the Grand Continental brand, said it has received a takeover offer worth 90.62 million ringgit from its major shareholders as part of a delisting plan. Tan Chee Ho and Sons and Hotel Grand Central, which together hold a 72.65% stake in Grand Central, are offering 46 cents per share to other shareholders. Shares of the usually little-traded Grand Central have remained largely unchanged so far this year and were last traded at 37 cents before the suspension today. The company owns 5 hotels, which have an average building age of 31 years and a low occupancy rate averaging 24% between January and May. It has been in the red for the past 10 straight years and has not declared any dividend since 2019. In the proposal letter, the offerors said given the condition of the hotels, a refurbishment is necessary to maintain standards and attract guests to improve the company's financial performance. They believe Grand Central's upcoming performance and earnings visibility will remain tough moving forward, adding that the delisting would also cut costs and savings would be ploughed back into refurbishment of the hotels.